All right, guys, I tested the audio this time. We were talking all that cold stuff. They were trying to get in our way, but they can't hold us down. I have a great video I want to talk about today because I think it comes into play with all the videos you guys have seen and based on like the questions I get from people and executing off of information. And that's why I said how to profit off of your trades. I want to talk about something. I've talked about it in the live stream. If you've ever heard, I bring this up a lot, and I really want to just clarify this for some people so that they know, and this is going to be necessary to understanding how to trade stocks. And really, it just comes down to this simple concept. You can know what's going to happen. That you could call that X. And just because you know X, it does not mean X is going to equal profit. So you can know the stock market is going to go up or down. Amazon is going to go up tomorrow, if you let's say. But just because you may be correct on X, that's not necessarily going to mean that you're going to have a profit comparable to how correct you are. And really, the problem a lot of people have, they could be right and they're still losing money on options. And this is very, very perplexing to a lot of people, but it makes sense. You have to, and this is what I want to talk about. I'm going to show some trades I did last week, and I want you guys to see. This is what I learned too. This always is in the back of my mind because I hate it because, I know certain things, but it's not always equating to the profit I should be getting. And, I'm not trying to feel entitled to it, but this is what I do. I look back through different chains after the plays and I try to find if I made the most optimal move for what my thoughts, belief, risks, all that stuff. So I want you guys to think about that. But we'll go over these plays again. If you guys are new, most of you guys have been showing love. Y'all have been hitting that notification gang, hitting the thumbs up. I'd fuck with y'all, man. That's it. Let's keep it going. I'm trying to get it cold moving. You can pledge below, all the links, the videos on the homepage. Go watch that. And more importantly than all that, give me some questions, man. I'm kind of running out of video ideas because I'm repeating this, but I do want to make it clear for a lot of people. I don't have a video on this, but I talk a lot. You guys obviously know that, but so yeah, let's get into it. I want to talk about it in the sense like even these last videos. So I could say it now. I thought I was very bearish last week. I was so fucking bearish, man. I don't like to put that on there. I don't want to get you guys confused or convicted on a play and do that because of this reason. You could still know, you can know X and you guys might still lose. And, I got to make my plays and I wanted to see, I saw halfway through the week, I made money on a put and I didn't like it. I was like, dude, I should have made way more. It wasn't worth it. Then the next day I switched it up and it was pretty profitable for me and I should have held it longer. But that's the one thing. And, I was talking to people and like, I had a lot of smart kids apply for the trading fraternity. Like I've been talking to them, like we're talking college grads, people in college, 4.0 GPAs, really smart guys. And I was funny because I'd laugh at like, you realize there's people way dumber than you in the stock market making money. And it's true. There's a lot of dumbasses. I don't really think I'm that smart. There's a lot of bozos in the market who are profitable simply because they might not even know what X equals. They don't even know what's going on in the stock market, but they're finding the right method to play it. And that's what I want to talk about here because let's say you get an idea. You need to select the right tool to do it. It was when I was moving my computer screens the other day and I have screws in the back and I couldn't find a screwdriver. So I used a knife or scissors, actually. I opened scissors and I unscrewed them. And that's what a lot of people are doing with options. You guys are getting an idea of something, and now instead of selecting the right tool to play or to accomplish what you are doing, you can still get it done with the scissors, right? You can still get it done with a knife, but there's going to be risk, danger, and it may not be as effective, and you might not get what you want, and you could damage something, right? Or it could change something. So that's what happens with a lot of people. The best example is Tilray. Tilray puts, if you guys watch the day after, you lost money, puts and calls. Didn't matter what happened with Tilray. You were losing money if you bought the options because people couldn't interpret the premium, what it was implying, and what the actual derivative was saying. You need to understand these so you could select the right tool. So there's that. And now the example I want to talk about is the SPY puts. So I was looking at them and like, if you got these on Monday or even Wednesday, these are the times. So I went Monday, Tuesday, then by Wednesday, I was like, nah, I wanted to get some. And I got some good stuff out of bottom. But if you got, let's say, like December 221, these are super far of the money. And my objective with this, when I have an idea the market is going to go down, I like to get quantity. So I like to get literally thousands of puts, no exaggeration. And this is one of those things. But again, too, and I am showing you this because this play is becoming less and less effective for me. So I'm giving it out, just because, and this is a warning for you guys, it is effective, it can do good, but the gains are kind of capped on these index options. There is some crazy moves, but you got to be careful, especially too buying far out of the money like this. It's short term, even decent term, it's just not a good idea. So you have to understand, and this is relating to it. I may know X, but to get the function of Y, I have to select the right tool to get me my profit. And I'm aiming for a large amount of contracts, and I have to really time that move within a short time period, because otherwise these will decay so fast. Because that's one thing too. Here's another tip: the further away from the strike price your option is, the faster it's going to lose money, even if the stock goes in your direction. So be careful of theta. I think a lot of people underestimate that, and it kind of, because we like leap options, TTF. I do it. Conroy loves them. There's great opportunities. I made that video. You could go buy something a year, 2 years out, and it's a good deal. But you also need to understand the effect of theta and time decay on those contracts and the relation to where your strike price is to where the stock is trading. So, but back to this, like the 225s, like pretty much you could have bought them, and no, those were December, so I'm not the December, I'm looking at November, but you could have bought these, let's say 28 cents, 30 cents. Market did that whole big drop. This whole week was like a 1,000 point move from top to bottom, from Monday to here. Even if you got them right here, again, at the low, these are still 29 cents, right? If you got them the Friday too, you're paying 29 cents. At the peak of it, pretty much you were up maybe 37 cents, you made 50%, and then you're pretty much almost right at break even the next morning if you didn't sell, and it starts going up. But then at the end of it, you're up at like 50, 60 cents. So you made 300%, maybe about 200% realistically. And really, the minute the market bounced, now you're negative. So there's two things to look at that. One, what was the risk you took, the probability of you profiting on it, and then what happened when it reversed against you. Because that is the thing a lot of people miss too, and this is what kills you, especially if you're trying to play puts. You guys are talking. I love my puts. I love to get bearish when it's bearish time. Someone even asked me that. They said, "Do I make money when the stock market goes up?" Yeah, I do great when the stock market goes up. I thrive in a bear market. That is, I've over the years has been my forte with it. And you guys see why. You see the information I'm looking at. You see what I'm into. But even then, this was the issue: is that you could have bought this in the minute it went against you, you were break even or you were down. And that's not a position you want to be in. You want to get in something that's going to build the premium up on you, get some intrinsic value. If it does drop, you're still up. Like I'm holding Facebook puts for that reason, because my Facebook puts dropped on Friday and I sold some of them, but I held some just because they were up 700%. Now they're still up 400%, 300. You see, and then if it keeps going from there, I may want to reconsider, or I'm going to hedge or do something else with it. But you see the idea. But now going to this, and now here's the scary part of what I'm going to tell you. The other alternative, and this is what I did. I switched to the weekly. I switched to, I think, November 30th or November 28th. And instead of now going, I did this on Wednesday, and it worked out because I was like, this isn't making me what I wanted. And I got to already kind of see it. And then even as the days went on, even up until after Thursday, I cashed out. I was like, oh, dude, there's no way I'm fucking around with this anymore. Really my goal now is kind of picking the exact time or shortening my time window if and only if I know what's going to happen. And that's granted, you never know what's going to happen in the stock market, which is scary. And so understand that. But what I've learned is that when I have as much evidence as I did last time, I see the opportunity. I need to hit it on a shorter time frame, closer to the money, to capitalize more off that move. And what I mean by that is, like, you could have went now and got where was it? I think it was like 271s. I think I was gonna get these instead, or 271, 272s. I was gonna get these instead, but same thing though. Now you could have bought these for like $200, and they went to 6, which is kind of pretty much the same thing. Where was it? Now there was one I need to find. I think it was a November 28th then. There was one, but pretty much it was, the difference is like I want to say 600% versus I gotta find them. There's literally something around like the 270 range, but the 140, no, it was one of, Well, this doesn't look good. I think it was here, like 160 or 200-ish. But even then, you guys see it was like 240 to 6. That's kind of like the other SPY put. But now, to kind of the best part, you'll see about this. Even then, on Monday, this one's trading lower than the lows on Wednesday, and that's time premium. But you could have gotten better. So now let me see. Actually, no, no, no. Honestly, I think that's just too much time. Oh shit. Sorry, Jax. But I think I went on a shorter time frame, so it's kind of more disgusting. Uh, where was it? Was it these? Where were they? Because these are all kind of the same percentage. I had one pulled up before, not really looking too good, so I have to find you guys a better example, because even then, this is like the same thing. Taking 20 cents to 60 cents is the same thing as taking $2 to $6, right? But I gotta find it. I don't want to waste too much time on this, but maybe I'll make a follow up with that exact. But I want maybe it's better for you guys. Go through last week and go see, compare puts and see which puts were actually profitable and which weren't, and which gave the best return versus. And that is really what you want to look out for. And again, like I'm saying, this is scary, because should you go to the weekly option to maximize gain? Depends how confident you are, and that is the real question, because that is risky. And if you're wrong, you're going to get wiped out. That's it. And that was the risk I was willing to take. However, but that's why I said I don't need to go with my time, because I'm pretty confident in what I'm expecting, or at least a decent move. I don't need that time. So why am I going to pay my potential gains for time? Now, please reverse that on the other side. Though most of you don't know what you're doing, or if and again, I don't even know what's going to happen in the market. Don't forget that. So picking the next play from there, that's why people have time. Time could save you, especially. And that's the thing, though. Puts are harder to make money on. Calls are easier. And if you're getting calls with time, it usually works out pretty well. So I'll leave it there. I'm sorry. I wish I could have got that better example for you guys, but I think it'll give you guys some hunting to do over the weekend. Hope you guys enjoy it. Give me some questions. Give me some video ideas. Yeah, that's pretty much it, man. Go check out the free stock trading course too. I think, we have all this cult shit. We got all this stuff going on. If you have any questions, anything, start that course, man. I talk about a lot of stuff. It's free, $1. You go through that. I promise you will learn a lot, and it would at least help you make more sense of the videos, how I'm going about getting news, how I'm capitalizing off it, everything. But it's a free resource. You guys should use it. This is how we're trying to build a cult, educate the world. So yeah, do your thing. Love you guys.